I may as well give the quick pitch. Actually, Derek's right. We're having a site visit here in 2 weeks. So if anybody finds themselves in Australia or wanting to go to Australia, you're welcome to join our site visit. So I'm happy to be here again. I was here in October, and the one thing I just want to focus on today are some of the milestones we've actually accomplished. Since taking over as chairman and CEO, the only thing that hasn't changed in these last 6 months, you'll see here in this deck, is really the name. And truthfully, that's something that we recognize. As a gold company, Royal Nickel isn't probably the best name for ourselves, so we're certainly looking at making some changes there as well in the near future. So let me just talk about some of the highlights from my visit here in October and some of the milestones we said we'd do. So we've been very focused on attracting new institutional shareholders, and when we did that bought deal earlier in September, October, we attracted 5 new institutions. Since then, we've been really marketing and targeting new institutions, and we've had quite a bit of success. So we're quite happy to see a lot of familiar faces and institutions joining into our company. We've made significant changes to the board. Obviously, myself as chairman, we recently added Chad Williams, who's the former CEO of Red Cloud. So I don't know if Chad's in the room here, but he's actually now on our board. Warwick Morley-Jepson, who's now on our board. He's the COO of Ivanhoe with Robert Friedland. So making some big changes to the board and obviously some huge changes to the executive team. So you'll see a huge shift. We're actually announcing another new executive early next week as a new CFO. So some big changes to the company as we continue to grow and understand what we really have. So let's just look at a snapshot of what we said we'd do. When we look at the last part of 2019, we talked about our production, and we were targeting 42 to 49,000 ounces, you see in our 6th bullet here. Our actual production came in at 51,000 ounces. And what you got to remember is this is a company that just started putting out guidance. We didn't have guidance before last year. We didn't have our own mill. So this is all on the heels of acquiring the Higginsville property that we had bought in June, starting it up, commissioning it, putting a team in place. So if you look by month, July, August, September, October, we achieved around 8,000 ounces. November, December, we bumped it up and did about 9,500 ounces per month. Again, I know I'm repeating myself, but this is right after acquiring the mill, putting 2 mines into operation into that mill. We've got the Higginsville property, which we're mining the Baloo pit from, and I'll talk about that afterwards, and obviously our Beta Hunt mine that has encountered that really high-grade coarse gold. We put out one metric here before our financials are out. We put out our cash at the end of the year because it's changed so much from when I started. Actually, at the end of June 30th, we disclosed our financials. We had negative $8.7 million in working capital as a company. When I walked through the door initially, cash was very tight. We knew that it was a risk for ourselves and our shareholders, and we had to do something immediately. After buying the mill, obviously we started things up. We did the financing, the $18 million bought deal. At the end of 2019, we ended the year with $37 million on our balance sheet. We used $3 million of that to repay some of our debt. We have an outstanding amount of debt of $32 million. It's at 10%. It's with Cortland, and it's due up in June. One of the first roles of our new executive will be to refinance that debt. We believe very strongly that we're going to be able to get better terms, and we're going to be working towards that here in the next couple of weeks, actually. The other thing that we accomplished that was a real game changer for us, we said there's 2 big things that we did last year, was obviously the acquisition of Higginsville that gave us the plant and the extra 1.9 million ounces. But something that changed us, our company, and that district that we're in Western Australia was the renegotiation of the Morgan Stanley royalty. That royalty had been in place for almost 19 years. It had been there a very long time. In the middle of December, we announced that royalty has now gone from approximately 7% down to about 2%. There's two components to that. We agreed to legacy ounces, so when we acquired Higginsville, we got in resources, measured, indicated, and inferred, we got 1.9 million ounces. So what we agreed to with Morgan Stanley was that of those 1.9 million ounces, 100,000 ounces of those would be at the remaining legacy ounces, so at that 7%. However, we have 10 years to pay that off. So for the next 10 years, we're going to be, the first 10,000 ounces we get out of Higginsville, we're going to get at the 7%. Anything after that, we get down to 2% royalty, which is huge. This unlocked this district that had been handcuffed for many, many years. And I'll talk about some of the results of unlocking this district. The other component was a grace period. So when we started negotiating this was early on in September, October, around that time frame, we were explaining to Morgan Stanley that we needed a grace period to start up, get cash on our balance sheet. So they agreed to us getting a grace period of 37,500 ounces. So the two components are a grace period of 37,500 ounces, which means this year our 2020 ounces from Higginsville will likely be no royalty. There's zero royalty on that grace period, so nothing at all. So what has happened since then, and this is the exciting part that I really want to talk about. I'll come back to the guidance after. I'm going to flip through the deck because there's a lot of slides and I only got about 15 minutes. So I really want to highlight what's happened since we've unlocked this new area that has been constrained. So this is the Higginsville area. This is 1,800 square kilometers. Since we've renegotiated that royalty, we've unlocked 5 new areas within our property, 5 new zones that were not previously mineable or economic to anyone or ourselves even. This is our Baloo pit that we had been mining. Here's the new open pit. So this is the Fairplay open pit that we've started in January. Again, all these 5 targets that I'm talking about are going to be on the heels of that renegotiation of that royalty from 7% down to 2%, which really makes these areas very economic for us. So the first one is Fairplay. This is an open pit that's actually being mined already. This is 1 kilometer from our plant. This had been sitting there for 20 years, 1 kilometer from the mill, but because it was handcuffed with such a large royalty, nobody was prepared to mine it. We have the advantage of obviously the metal price and the FX in Australia, and with the new royalty terms, this place here, it's about over 2 gram open pit that we're going to be mining, that we're already mining in already. So that's one of them. This is a map just showing all of the areas, but yesterday we put out a press release on, oh, sorry, my apologies. Here, we put it on a new deck. I apologize for the name here. I know it's not the great name, but it is a historic name, Corona, unfortunately. So Corona, believe it or not, has had some very high-grade intercepts. So we've got another area that's open pit or underground target. You can see some of the results, 657 gram, 225 gram. These are all great underground targets. We've actually published the Hidden Secret and Mouse Hollow that we have done some drilling on, some follow-up drilling on. So we're mining the Fairplay already, 1 kilometer from the mill. Baloo, we're continuing to mine. We extended the life of Baloo by a full year from what we originally had when we bought it from doing some drilling. Baloo is constrained by drilling, and it's still constrained by drilling. The other area is this 5 kilometer strike that we put out to. One of the things that we did early in January, as soon as we got the royalty renegotiated, was a big geophysics plan. We did a huge study here north, and our mill, you can see the red dot on this slide here, the mill. The mill was originally built for the Trident deposit, which mined approximately 1 million ounces at about 11 gram. Just north of it, you can see this brand new structure. It's 5 kilometers in strike. Very similar strike to our Beta Hunt mine. So a new structure, 5 kilometers long. So if you look and just recap what has been done in a very short time frame since renegotiating a royalty, We've started a fair play open pit. We've identified a new 5-kilometer strike through new geophysics. We've done some drilling at Hidden Secret and Mouse Hollow, which are now going to be part of our pipeline into our open pits. We've always said that we want to put 24 months in front of our mill from Beta Hunt and from the open pits, and these are going to be part of our pipeline. And then fifth, the new structure of 5 kilometers long that's been untested, not one drill hole. Just to give you an appetite or a feeling of some of the exciting areas that we now have because that royalty's been lifted. I'm just going to go back to Baloo. So Baloo here, we had been mining since we got the plant. We had stage 1, we've been mining about 2.2 grams. Stage 2, as I mentioned earlier, fully permitted now. We just got the permits last quarter, we announced. We are now extending it to the end of this year. It was originally scheduled to end in December of 2019. Once again, completely constrained by drilling this thing. As we drilled out, we added a full year to it already. Let me just go to the beginning and talk about where we're heading now. So what are we going to do in 2020? We put out guidance this year for 90 to 95,000 ounces. Roughly, it's about 8,000 ounces a month. What's important about that guidance is that guidance does not include any of the coarse gold from our Beta Hunt mine. Our Beta Hunt mine has those coarse gold areas, and I really wanted to focus on a lot of the upside that's happened since we've unlocked that royalty. But we will be mining in those coarse gold areas this year as well. They're not included in that guidance. As we were mining the second half of 2019, the one trend that's been extremely good for us is our all-in sustaining costs. So when we originally took over the company was sitting at around $1,300 an ounce all-in sustaining costs. Q3, we dropped it by about 11% to $1,183. Our Q4 numbers are not out yet, but you can expect from ending our balance sheet with $37 million, a similar trend that what we saw in Q3 to Q4 of that down from about another 10%. You'll see a very similar trend from 13 to 1180 and another trend heading towards our target of 1,000. From day one, we said there's 4 things we're going to be doing. We're going to be focused on G&A, we're going to be focused on royalties, we're going to focus on personnel, and we're going to focus on vendors. And we're going to get to that $1,000 an ounce all-in sustaining costs, and we are very confident we will get to that number this year. 2020 is going to be a big year for us in exploration. That district at Higginsville is 1,800 square kilometers. We've identified 5 new areas already in 2 months here. We've got 45 to 50,000 meters of drill spending already budgeted, approved by the board, $9 to $10 million in a district that has been really neglected for quite some time now. This area has not seen any exploration for a long time. Again, it's really based because of that royalty was so high. We're looking at getting that ASX listing. That's something, because our mines are located in Australia, we believe that having an ASX listing and getting access to more institutional shareholders will benefit us in the end. So that's something that's ongoing that we intend to do. And then we're looking at, as we're bringing in more areas into our pipeline, we're looking at engineering work on a couple of things, technical things, ore sorters and also mill upgrades. What would it take for us to increase our throughput into our plant by 20% or 30%? We're doing some engineering work behind the scenes to make sure we understand that. If that's something we want to execute or pull the trigger on, that's something we'll certainly be high on our list of priorities to do. I talked last time I was here about our team, and our team is, I've got the 1-minute signal here, so I just really want to talk about the team really quickly, because this is what's been very important and what's differentiated us. Not only have we stopped focusing on the nickel and focused solely on the gold and had a plan and a strategy in place and ticking the box. Obviously, when I joined, the first thing that I did was hired somebody in Western Australia who could run the Western Australia operations, and that was Graham Sloan. He hired 2 new GMs, and I'm not sure if I gave this one metric before, but I will repeat it because it's so important for where we are and for any one of us as operators. Before we took over, our turnover rate in Western Australia was 87%. So we would fly in 100 miners in, engineers, geologists, surveyors, everybody, 100 people in. They'd work their 2-week rotation. Only 13 of them would return on the next rotation. It was so bad. It was very difficult, very hard on safety, hard on costs. This has been a big part of our cost reduction story. Graham has hired 2 new GMs. Our turnover rate today is about 16%. It's below average in Western Australia, and we're quite proud of that. Our safety numbers have come up. Our productivity levels have come up. Our mill availability has come up. We're heading on the right trend with our costs continuing to drop down and our sustained production.